Have you ever entered a trade only to lose money because prices reversed? This is often a result of fake breakouts. Today, we will explore fake breakouts versus real breakouts. By the end, you'll know how to trade wisely around support and resistance. In trading, support is where prices tend to stop falling. Resistance is where prices stop rising. Breakouts occur when prices move beyond these levels. However, not all breakouts are genuine. Some are fake, leading many traders into bad trades. Let's first look at what a fake breakout is. This happens when prices break a support or resistance level, but quickly retreat. It tricks traders into thinking a real breakout happened. As a result, they enter positions only to suffer losses. Next, we need to understand how to identify these fake breakouts. First, watch for volume. A genuine breakout usually comes with high volume confirming the move. If the volume is low, be cautious. This could indicate a fake breakout. Another key point is to look for retests. After a breakout, the price often returns to the breakout level. This is a retest. A successful retest confirms the breakout. If prices fail to hold the level, it may signal a fake breakout. Now let's discuss strong candlesticks. When a price breaks out, look for strong candles. A strong candle has a long body and little to no upper or lower shadow. This shows conviction among buyers or sellers. If you see weak candles, consider staying away from that trade. Let's use an example. Imagine a stock priced at $50, facing resistance at this level. Suddenly, it jumps to $52, pulling you in. But the volume is low and the next candle is weak. This could be a fake breakout. Instead, wait for the price to retrace to $50 and form a strong candle before considering a buy. Common mistakes include entering trades too early. Many beginners jump in right after a breakout. Instead, it's crucial to wait for confirmation. Rushing in can lead to painful losses. Another mistake is ignoring volume. Always check if there is enough support for your trade. Low volume can spell trouble. Now, let's look at some practical trading tips. First, practice patience. Wait for strong candles and volume confirmation. This can greatly increase your chances of success. Second, use stop-loss orders. Protect your trades by setting stops just below support or resistance. This limits losses from potential fake breakouts. In summary, understanding fake and real breakouts is crucial in trading. Always look for strong volume and candlesticks. Don't rush. Wait for confirmations like retests. By avoiding common mistakes, you can trade more effectively. Now that you know the difference, start practicing today. Make sure to keep learning and refining your skills. Hit the like button if you found this helpful. Subscribe for more simple trading tips. Happy trading!